What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla, ticker symbol TSLA, on a variety of time frames in anticipation of tomorrow's trading day, Tuesday, February 6th. Now, Tesla here today, finishing the day down almost 7 points a share, 3.67%. Now, Tesla is a volatile name. If that were the S&P, of course, that may be a problem, but Tesla, this is not unexpected. Interestingly, we made a huge test of this region. We're going to talk about that once we get to the little bit longer time frames. But let's zoom in here. Take a look at the 1 minute chart today. You can see here that as Tesla came down early this morning, fading hard off the open, we were forming what many would see as a potential bounce setup. Listen, for me, the channel was too tight, the downtrend was too aggressive, and the tests were too mushy, is kind of like the only way to describe them. Really not something I can scalp with a high level of confidence that that's going to have edge long term. By the way, if you guys want to get scalp setup alerts, my personal scalp setup alerts, perhaps swing trade setup alerts, unusual options activity, platinum one-on-one, there's a few more spots available for that. You can find all of that at the link in the pinned comment. Hope to see you join. But let's now take a look at the 5 minute chart and really kind of zoom in on volume here, okay? We can see that this isn't unexpected, but volume actually was pretty high on this sell-off. But what's really interesting here, typically what we see as far as a volume profile is concerned is we usually end up seeing a U-shape throughout the day. Okay, except here where the stock started to bottom out, breaking through 177.50, getting down between 175 and 177, we actually saw the highest volume candle of the day. And then two more that actually exceeded what we saw off of the open. That's pretty unusual. You know, even on a stock like Tesla that sees volatile moves intraday rather commonly. Now, what I think is interesting about that is these are bottoming candles, at least getting near, right? This one, not unexpected. That's going to be high volume upon the break of that big level that so many people were watching right around 177.50. But these two candles were getting near that bottom as we came into 175. And then as we consolidated for, about 20-25 minutes down in this region, just around 176, the volume kind of started to fade. And then we got, that lower volume return back up toward equilibrium on the day before consolidating really for the remainder of the day on relatively, I can't say low volume because it's Tesla, but relatively low volume, all things considered. Now, you bears, you're actually going to look at this high volume fade off the open, and I think the bears are actually going to be relatively happy about that, looking at that. However, these kind of four candles just throw a wrench in that a little bit, because this is where we kind of bottomed out. You got the highest volume, and the candles, excluding this one, were not all that extreme on that high volume, showing that the bulls actually began to put up quite a fight. And it really wasn't such a clear market decision to continue downside. We got that beefed up volume from both bulls and bears going kind of head to head as we came down around that 176, 175 region. Okay, so very interesting. Have to stay contextual when we're looking at volume. Let's zoom out now and look at the 30-minute chart. Get a look at the self-fulfilling prophecy areas and get some more context as we head into tomorrow. Now, I don't want to look at macro levels quite yet on the 30-minute. What I want to look at here, the 50 period, that white line, and the 200 period. Immediately relevant, of course, is that 50 period. Right now, we are approximately 1.7% away from making a test of that area, and we're about 3.6% away from that 200 period. So listen here. If you're a bull, looking at the 30-minute chart, remember, we're always looking at multiple time frames, okay? But specifically here on the 30-minute, as a bull, you're going to want to see that 50 period reclaim, because listen, everyone on the 30-minute has that line drawn. It becomes a self-fulfilling prophecy. It's not magic. It's just psychology. So ideally, if you're a bull, you're going to want to see that 50 period reclaim, right? Now, if you're a bear and we end up seeing a retest of that 50 period, one thing's on your mind, just fade as hard as possible off of that 50 period. Let it continue downside acting as kind of a descending resistance area, right? But in a bigger view of things here on the 30-minute as a bull, the reason we want to reclaim that 50 period obviously is to then make a test of the 200 period, but one step at a time here. All right, let's move on now to the 4 hour. These get increasingly important and popular, which increases their importance, at least in my opinion, as we zoom out a little bit. So the 4 hour here, as we look, you can see that 50 period is currently sitting right at around 191.50. So that puts us, as we speak, about 5.5–6% away from a test of that. I mean, listen, as soon as possible, I would love to see Tesla reclaim the 50 period on the 4 hour. It's been going back to late 2023 since we've been above that thing. So I think it's about time, ideally, to get back above that from a bullish perspective. But what starts to become very obvious here on the 4 hour is this 177.50 to 180 range, which I think we should zoom out and start looking at the daily here to really, really get a good view of what's going on. You can see this level goes back a long time. This goes all the way back to late 2022 at least. And you can see that we recently saw a bottom and a bounce right off that 180 range. That 177.50 up to 180, that's a range now, right? We're not looking at an exact penny. But psychologically, you're going to have a lot of traders, a lot of investors seeing that as a potential safety net, a potential area of support. So listen, if you're a bull, looking, not only necessarily to tomorrow, but really the remainder of the week, but especially tomorrow, again, one step at a time here, we want to see 177.50 to 180 hold. Bounce up out of that hole, put some distance between the stock price and that range. Because listen, I think realistically, it's such an obvious level. I think that's drawn on a tremendous amount of charts. Now, you bears, one thing is on your mind here. Break downside through 177.50 and head down toward the 160s. If you're a bear, that's all you're thinking here. Now, let's take a quick look here. We'll zoom in just a little bit and take a look at implied volatility. See where that's sitting. Now, this is a good indication of comfort levels in the stock, and also incredibly important if you're trading options. You can see here that if we compare to the last about 4 months or so, we are in the lower to slightly mid-range of implied volatility. Remember, the lower that goes, the better potential opportunity for new options buyers to, again, potentially benefit from an IV pump-like scenario as that, if that, returns up toward equilibrium, okay? And as this goes higher, right, if this were, for example, all the way up here at 0.6, that's 60%, I'd be telling you that there's an increased risk of potential IV crush, okay? Just for context here, but remember, we're in the lower to mid level of that range, looking back about 3 to 4 months here. Let's now take a look at the options chain, get an idea of what the traders are thinking heading into tomorrow. So 2.49 million total contracts traded here today. That's a great sample size. We can get some good data out of this. And here we have 1.33 million calls, 1.16 million puts. So we're seeing that overall call put ratio leaning just slightly bullish. Now, the short-term speculators, what are they thinking, right? Because, again, we're looking specifically at tomorrow. So this 0 to 20 delta range is what I'm most interested in here. Nearly 581,000 calls, about 435,000 puts. So we're seeing a slight bullish lean on the overall ratio, and as well a slight bullish lean with those short-term speculators. Listen, before you head out, let me know in the comment section what stocks you'd like to see me cover here in the near future. Even if it is just Tesla, or if you have another suggestion, let me know. That feedback helps out tremendously, and I'll see you in the next one.